Gary, hello, how are you?
Yeah, good, thank you, Leo. How are you?
I'm very well, thanks, Gary. Friday, looking forward to the weekend. Gary, your article, I wanted to ask, interest rates, they're at record lows, so should we be worried about that?
Yes, they're at record lows, and that very, very interesting data from the Bank of England, which tracks them back to the early 1300s, which is sort of the reign of Edward II, son of Edward I, Edward Longshanks, the character played by Patrick McGoohan in Braveheart, and the time of William Wallace, the Mel Gibson character. That's how far back these rates go, and they are the lowest on record. And then if you look at the pure UK figures going back to the time of Queen Anne, they're the lowest on record. So should we be worried about them? Not particularly, but holders of long-dated gilts will get absolutely hammered if these rates just start trending back to their long-term average. They don't even have to go above average. So if you're holding a 30-year UK gilt and 30-year interest rates return to their long-term average, you'll lose around 50% of the market value of your security. And that's meant to be a safe asset. So if you are holders, if anyone's watching this and they are holders of long-dated bonds, you need long-dated fixed interest bonds, be afraid, be very afraid.
I wondered if you could talk us through Chart C, the UK government and 15-year corporate bond yields. There's quite a lot going on there, and can you walk us through that?
Yeah, so these are now a pure UK set of interest rates. So these are from the Bank of England, and they're, Bank of England established 1694, and the bank can track UK interest rates back to the early 1700s, time of Queen Anne. And what you can see from that chart is that they are at record lows. In 2020, they've been reduced to levels they've never got to before. But you don't have to go back too far to see them at their record highs, which is in the 70s. And I refer to that in the article. That was a period of very, very high inflation, and interest rates were very, very high. But what that chart shows you is that sort of from the 80s onwards, and in fact from the mid-70s, we've had this long, prolonged period of falling interest rates till they've shot down below their long-term averages and hit these record lows. And you could see that the green line is UK gilts, they're government bonds, and the red line is corporate bonds. They're what AA rated companies can borrow at the market today, and they're also at record lows. So this period of interest rates as they are today is unprecedented.
Thanks, Gary. And just lastly, Caroline had mentioned in her pre-US election article recently that should there be any delays in the results, that might present opportunities in the markets. Have you been seeing any?
Well, funny enough, the market simply decided that they were going to go positive. It didn't seem to matter whether Trump was in the lead or Biden was in the lead. The markets get positive, and there is this track record that markets tend to do well in the year of a presidential election. What's affected them this year, of course, is COVID-19. So, no, we've not really seen many opportunities. What we have seen once or twice in the past few days is stocks that we already hold, and particularly UK stocks that we felt were very cheap, have sprung back to life and have moved forward quite sharply. I think that is a mixture of things. I think partly to do with the US election, but also the expectation that there'll be a deal on Brexit. So I think the problem at the moment, Leo, there's so many things out there, COVID, Brexit, the US election, the trade wars, etc., that you can't always work out what exactly is the driver of a price change in the market. But what I would say, and I think this is a key point, although you see some very expensive stocks out there at the moment, like the big American tech stocks, there are companies at the other end of the scale that look remarkably cheap, which should do very well indeed once this pandemic passes and the economy begins to recover back to something like normal. So these are actually quite exciting times for people like us that like to dig down and find decent businesses with good prospects that perhaps have been underrated by the market but will have reasonably strong balance sheets. And there's a few of those around right now.
Gary, thank you very much. We'll leave it there. Next time we speak, I'd like to touch on all the spending and borrowing that's going off and a couple of questions we've received from clients on that. So until then, have a great weekend. Look forward to Monday when it all kicks off again.
Thanks, Leo.
Take care, Gary. Bye now.